good afternoon. Closing trades on ET now. I'm Anisha Jain, with me is Nikunj Dalmia, and it's a complete reversal of what we saw at the start of the trading session. From a risk-off mode, it's completely risk-on right now. There's a solid recovery at our house. Whether it's the Nifty, which has managed to recover over 350 points, in the Bank Nifty, that's managed to recover almost 1,000 points from the day's lowest in the trading session. Very swift recovery, and the good news is it's getting on to. There's not a big worry right now, and we are not seeing any dip on the rises that we have seen. Separately, in terms of the big movers right now, of course, it's gold and crude which will erase the gain. So, of course, at the start of the trading session, there had been a spike in crude which had reached of $90. That's back to 87. Gold too is now just around that $400 per barrel mark. US futures, which were initially showing a cut of 200 points, narrowed to 300, and right now it's just showing a cut of around 100 points. So, complete reversal of what we saw at the start of the trading session. HDFC Bank, that one is focused. That one is in focus ahead of its earnings, which are expected tomorrow. We also have ICICI Bank, which is gaining ground. ITC is the other heavyweight, as well as Reliance, which are actually batting bulls right now. So, good amount of recovery across the board, and it's a good screen. That's exactly what Nikunj we were discussing in the morning, right? That yes, there's a geopolitical tension, but you need to differentiate the noise from what's the fundamental of the market, and clearly that's what's happening right now.
So, Anisha, geopolitics is not the reason why US markets have fallen. Let's first understand that. Markets, at least the developed markets, have fallen because the Fed has actually bowled a googly, which is that instead of a definitive path of rate cut, they are talking about an indecisive path of rate cut. That, I think, is the bigger concern from a market structure and from a market fabric rather than geopolitical tension. Now, geopolitical tensions, if they escalate, talk about it, but you got to take narrative on a real-time basis rather than assuming, okay, this will happen and that will happen. One. Second, the problem in the Indian market and for benchmark indices, I think, is what is happening to FI selling. Now, whatever could be the factor, compulsion, valuation, raising cash ahead of the election verdict, election cycle, whatever may be the underlying cause, they are selling the market, which is capping the market down. And today's recovery again is a clear example that at lower level, every time we are going to, let's say, Nifty language support level, the markets are finding because every time key stocks have fallen 40-50%, you're finding them kept coming back and getting some amount of dip buying. So it's a market where you will have to say that you cannot be very bearish, you cannot be very bullish. It's a market where you will have to really time your entry on bad days and time your exit on good days to book some profits if you're a pure trader. Now, when it comes to the medium term picture, Anisha, frankly, nothing changes. The challenge what I see is that there is just no support coming from any large news. I mean, IT has been thanda. There's nothing else actually which has come from the earning front. That's my only concern.
Let's hope HDFC Bank manages to reverse the course of that, because tomorrow is when the numbers are expected. Q4 provisional updates were quite strong, and the stock is excited. So there is more room for perhaps a bit of a surprise there, or if not, the stock might decline given the fact it's already been doing quite well. Let's take it across to our technical experts for helping us the insights into what we should read into the market mood right now. Kunal Bothra as well as Marani is always with us. Kunal, let me start with you. This reversal, I don't think any of us anticipated it with this kind of ferocity at the start of the trading session. We were all discussing how we should probably stay away from the market. Has that narrative changed now? Would you take a bet right now, given the fact that there's a weekend and the news flow could turn again?
So, good afternoon. I think partly yes, that you could probably, we probably not anticipate that the markets would go into a full swing reversal on an basis itself. But then what has changed intraday is, a lot of technical and derivative factors. For example, what we're seeing from that of 200-300 points recovery for the Nifty is that there's been a major amount of rise in the 22,000 strike for the index. Now, after such kind of geopolitical news flow, when you see such amount of extreme writing for an index at a particular strong psychological level, that generally, brings to a place that the markets are now expecting that this could be a floor for the index next 1 or 2 weeks, and in the next 1 or 2 weeks is where we are expecting that the markets probably be a lot more volatile, but the data is completely different. So this puts into place that this recovery is here to sustain, as well as we could probably be expecting a build up of the market trend going forward. Now 22,000 could be a base or a support for the index. And looking at this change of data for the index front, I would probably expect that this trend would continue for larger cap names. I think the first put of call is when the markets get into recovery, that large caps are the ones which could take the first leg up, and then followed by that, when the market gets into a much more better confidence zone, is where mid caps and small caps tend to outperform.
Okay. What a comeback it's been. Let's look at global markets for a second now. Dow futures, let me just look at it. Just give me a second. Europe. So it's like a very broad-based recovery in a sense which has happened. Treasuries have also come off. There you go. Where is Europe? Just give me a second. European markets are not in the green, so you are actually outperforming the markets. It's evident. US futures, however, let me just see. No, they are also. So you're doing much better than what the world is doing. In fact, most of the European markets are down by about 3/4 or nearly quarter to about 3-4%. Nothing scary, nothing alarming. Let's see how it progresses for the rest of the day. Is today one of the days where FIs have not sold? Maybe yes. If that is the case, then obviously the recovery in the market, I think, is really a factor of which way the technical flows have moved in the short term. Bajaj Finance, unusual name, it's done well for itself. Reliance numbers are on Monday. Ahead of numbers where Reliance. It's been a standout mover this year. 29.36. Jio also, I mean Reliance and Jio, they both have had a very excellent year, so to speak. Jio also is 371, off from the day, up from the day's low. Pashupati Advani joins us now. Long time. How you been, my friend?
Good, my friend. This is like a very quiet, sleepy market.
We had gone to Bombay Stock Exchange today, and I was fondly telling my team that there's a building where Pashupati had his grand office.
Well, anyway. So basically, I think we are having, because our elections are also going on, and because of that, we have some strength in our markets versus the rest of the world is waiting to reach 100 and a war to continue and all the bad news that is coming. So that, there seems to be nervousness in the rest of the world. India, of course, SIPs continue. People have confidence. Like Modi ji is going to come again. So therefore, people have confidence that policies will stay. And I think that's what's fueling our markets. And I think it will be reasonably firm until at least till the election results are announced, as long as there's no great catastrophe in the Western world. So that's the only concern that I have in markets right now. Nikunj?
Hello. I say the word hello because rarely you see a 2% move. Nuresh, has the tide turned for HDFC Bank?
Yes, so it has started making that first change after a really long time. So 1400 was the price point, 1470 was the high for almost 2 months. It was in a very tight range. You broke off 1470, went to 1550, and on a retest did not even test 1470. And now we are turning around. So the results could be the next trigger if it can do so. So I would expect 1450, 1470 to be a support, and upside we could slowly and steadily retest the 1600 mark. So technically, a major bottom reversal is done after that move above 1470. Only when it starts going below 1470, maybe there would be a change of view. Otherwise, we are slowly headed higher.
Okay, slowly headed higher. That's the verdict coming in for HDFC Bank. But of course, tomorrow is the earnings, so a lot is contingent upon what they really deliver. Separately, take a look at TVS Supply Chain Solutions. That is up 14%. Force Motors is, gaining with quite a bit of force right now, 13% higher. Elecon Engineering, which is just a result candidate, we saw a solid show when it comes to the top line and the profitability by 10%. And then Motilal Oswal, which is going to consider a bonus issue perhaps on April 26th, is also in focus. So all of these stocks doing quite well. Edelweiss Financials is the other one. In fact, Pashupati, this entire basket of the broking, the AMC, the financial market ancillary, that is the exchanges, CDSL, etc., they all have been doing quite well. And of course, there's a fundamental tailwind to it. But the question becomes, when does it price it in? What do you say of the valuations there, and what's the top recommendation from this pack?
Well, I think that the pack is obviously doing well because as more and more people get involved in the markets, and we are seeing that, there is obviously going to be returns to all the big players, and certainly it's big players. The other thing is that there seems to be some consolidation in the space, and some of the smaller players are closing shop and moving into the fold of the bigger player, which is also helping the earnings. And then, of course, you see, sort of, they're spinning out like 360 and Novama are separate from the parents, and I think that's also showing a good thing, because it's becoming a separate business as we're getting identified and on very high PEs. But those are all pluses for the entire industry, and I think that's great. It's all I say is finally the industry is getting its due. It's been a pasted industry for many years.
We also spoke to KK Mystery. Now, we spoke to him earlier in the morning, where his views on HDFC Bank are very important. Right now, let's take a break. When we come back, we'll try and get you an excerpt of our conversation with KK Mystery on where HDFC Bank is headed and why the near-term numbness in HDFC Bank is a matter of time will get corrected.
If you ask me what was it that contributed to that, I would say number one, truly the highest standards of governance. We were willing to compromise on people not being very efficient, not being very great in their job, but even the slightest, even the tiniest question on governance would never ever be tolerated. So that I would say would be one principle. Second principle is we kept the headcount very low, very small. Didn't have too many people. For an asset base as big as ours, we had just about 4,500 employees in HDFC Limited at the time of the merger. We invested a lot in technology and systems, and we kept an atmosphere in the company which was free of politics. If you ask me honestly, that was one, I consider that as one of the most important contributors to our that everyone contributed. And the third I would say is that we very, very clear goals that we set for ourselves. Opportunities were always, India was growing and India continued to grow. And I truly believe that even today the growth opportunity for financial services in India is absolutely phenomenal. When I joined HDFC in 1981, October 1981, our share total capital was 10 crores.
That's it.
10 crores. And our market capitalization was about 8.5 crores.
8.5 crores.
It was trading below market, below par. That was 1981 October. At the time of the merger in 2022, 41 odd years later, our market capitalization was 60 billion with a B dollars. That was the kind of wealth that Touchwood we created. And besides HDFC itself, we had a number of companies. We had the bank, we had the life insurance, general insurance, asset management, HDFC Credila, venture capital, real estate, all of that. So you take the total market capitalization of all the listed companies in the group at the time of the merger, it was about $175 billion US.
Wow.
That was the kind of wealth we created.
Well, in the meantime, take a look at the stock price of Anupam Rasayan. That's been a sharp spike. Ramkrishna Forgings is the other one, and then Nuvoco Vistas is also one stock which is actually perking up as we speak. So quite a few buzz in the trading session. But Nikunj, what surprises me today is the kind of result reaction that we have seen for Infosys and Bajaj Auto, and complete, distinct from what the earnings was. Infosys was very disappointing. The stock is actually in the green right now, and you have Bajaj Auto where there was nothing to compare in the numbers, but it's actually down at a time when M&M, Maruti, etc.
See, Nisha, what matters is what news is in the place. With Infosys, the stock had already fallen in the run-up to the numbers. TCS had gone up in the run-up to the numbers. Bajaj Auto has been a massive outperformer in the run-up to the numbers. So, in the near-term, market will always try and build up on expectations, sell out the news. So, if you ask me, is there a long-term trajectory change for Infosys post the numbers? The answer to that is no, sir. I think the business for IT services is in a disarray. Within that, TCS is up there, and rest of the pack I think is shaky. The business for Bajaj Auto is in structural uptrend, which I think is visible the way they've demonstrated their ability to move from two-wheelers to three-wheelers, and from three-wheelers to premium biking, and premium biking now to what they're doing in terms of the EV space. 20% margin of environment when exports are picking up and domestic market is in a sense struggling. I think is a clear example that the worst is behind Bajaj because they've demonstrated the ability to gain market share. Now, what happens today, tomorrow could be a function of technicals, who bought before the numbers, who wanted to sell out before the numbers. Those factors could be at play. But from a positioning standpoint, Infosys remains an underperformer and Bajaj Auto remains an outperformer. Pushupati Advani, do you agree? Do you disagree? You have the option to do both.
No, I absolutely agree. I think that see, again, what we're looking at in the market right now, everyone is grasping at straws because you're just trying to find good news. If there's expectation of good news, you buy into the stock, trading people, and then once the news comes, good or bad, you get out and move on to the next one. You got earnings. A lot of people, play this game all the time, and with a pretty good margin on success. So, why not it continues? It also creates volume in the market, creates liquidity in the market. So it's very good for our system. And, so let it continue. Nikunj?
So what's been your approach, right, Pashupati? I mean, where are you shopping in this market? Where are you taking some chips off the table, if I may use that terminology?
Well, I have not liked in IT really because I just think that, as you said, the whole sector is in disarray because the business models are changing. AI is coming. It looks like AI, the main profit is going to go to the big American companies rather than to spread to the rest of the world. So, and our guys are not able to, pick up and get new business fast enough, even though we've got a currency that's got weaker and that should increase their bottom line. So, but I've not been enthralled with IT. Where I am excited is I think that infrastructure is still continuing and it's continuing in spades. So I would say that you've got all your construction companies, all the cement, all the steel, because roads are being built, buildings are finished, tunnels are being made. We're seeing the coastal road in Mumbai open slowly, but we're seeing it. So those of us who've enjoyed part of it are actually saying, let's now wait for the rest of it. So I think that all these things are occupied. They're being driven by the government from the front, and those are the companies we bought. And you're getting good dividends also from these companies. And I think you've made a sectoral change into some good profitable government companies over the last 6 months. You've all done very well, and I think that's really where we even should continue to go even now.
That's the take coming in on the markets and the stocks which are buzzing around right now. But Tata Communications is one stock which is down about 5%. The numbers actually came day before. Yes, they were slightly muted, especially on the margin front. But we did speak with the management and they sound confident that even though they can't call a bottom on the margins as yet, they're expecting a bit of a recovery. Given the stock is down almost 5%, let's listen in to the management's take.
There is a drop, but I would say largely it is going by design. We're in a mode of investment. When we called out our strategy to double our revenues, we said that we need to invest in the markets with people on the ground, invest in marketing. As an integrated unit, the media business will turn profitable. And similarly, Kalera integrated with our erstwhile Digo and InstaCC platforms, which is what we call as a customer interaction suite, that will turn profitable this year. Our strategy very clearly is to improve the margins in this coming year. I don't want to comment on a quarter-on-quarter basis, but our strategy when we acquired these companies is to deliver on the synergies, to deliver and make them profitable, which means that our overall company profitability will go up. That is what we will be working on.
Where are we? We've just maintained that comeback. Maintained that comeback both on benchmark indices. From the day's low, how much is the recovery, Kunal, now? You're up 140 and you were down about 150.
Yeah.
That's about 300 points of 50, right?
Yeah, 350 approximately.
Which is impressive.
Very good.
Which means the support in the market is now respected. And now the quest to find the new resistance or new highs on.
So I think not just that key support point of 22,000. We've reversed the sentiment of yesterday, Nikunj, which is the most important part, because yesterday in this last 1 hour, 1.5 hour, the Nifty fell 300, 350. The Bank Nifty fell by I think 800, 900 points. Now to reverse that immediately next day requires a lot of strong push from bulls or buyers. And when that happens, that's generally an indication that a major bottom is in place. And we sort of and then the data complements that with the extreme amount of writing at 22,000 put option. And this coming point when there's so much of geopolitical news flow which started, which we started the day off with, and then we see this kind of technical data point. So the last of indication clearly indicates that we are at a point where the risk is much more favorable to try and go for a buy position over here. Yes, there could be an extreme amount of news flows which can keep on lingering around over the markets for the next 1 or 2 weeks. But then if the data points still stand to be robust, then I think the chances of the uptrend is pretty much on the higher side.
You had sell calls in the market.
Yeah, two sell calls. PHEL.
So are they still intact or they've been topped out?
More or less targets have been reached for both.
And if somebody is following those calls, get out.
Yeah, I think the targets are reached and you tend to book out those stocks. Now,
Okay, you got the target.
BHEL was one of the stocks.
So the stop losses were not triggered. The targets were reached.
Yes.
Okay, but no shorts right now.
No shorts right now.
Okay. Naresh, can I say that half an hour is left, 48 hours, it's a weekend, you come back, you don't know what will happen on geopolitical. Should one go with long positions, come back on Monday, hoping that you'll get a better exit, or it's too dangerous to have overnight positions?
So, an overnight position with just a view of a day, yes, there is a risk because we'll see volatility. If somebody has a positional view, then we are seeing more advances and declines. For example, you have stocks hitting new 52-week highs and all-time high also. So you have a Bharti Airtel in the last 2 sessions hit new all-time high. Both the days, even when the markets were down. So if one has a stock-specific view, one can carry on. But for say a single day view, it would still be a little more scary. One data point which I'm looking out for is after a long time, we are seeing Nifty futures in a discount. This tells you that there has been a lot of short covering today, a lot of short strapped. So we need to look at data again from next week. So stock specific bias remains positive, but not for a single day, but for a week or so, things still look interesting on the long side.
That's the market mood right now. On that note, Pashupati, we let you go. Thanks so much for making time and speaking with us today. But let's take the closing trade ideas from our chartist. Kunal, you go first.
Bharti Airtel is something which you recommended in the first couple of hours. I think that's a stock which is reasonably well from being on a negative side. The stock has come back towards at its multi-week, multi-month high. So would maintain that buy call on Bharti Airtel.
Not multi-month, multi-week. It's a record high for Bharti Airtel and it's been holding on to those gains. The other one, of course, is JSW Energy. You also have KSB Pumps, Motilal Oswal and Elon Engineering. All of these stocks are at all-time high levels. Naresh, what's your closing trade pick?
So that would be a buy on IDFC Limited, where the stock has finally started showing a lot of relative strength after correcting down to 108 levels, slowly and steadily moving up. And now is getting into a range of 120 to 125, making a formation. Going forward, could break that flag and head up to a new 52-week.
The top recommendations coming in from our chartists at this point of time. Time now to slip into a very short break. Don't go anywhere. Last 30 minutes of the trading session of the week. We'll track that when we come back. Welcome back. Well, the recovery has been maintained for now, 2,150 on the Nifty, and that is where we have found a bit of a roof for ourselves. From there, we are not, rising further, but the Bank Nifty has shown an impressive recovery of almost 1,000 points, and that, of course, has been led the big gain that we have seen on HDFC Bank. Bajaj Finance is also doing quite well, 3.5% gain coming in, and then the auto pack with the likes of M&M, Maruti going along very, very nicely. Let's welcome on board Chakri Lokpriya, who's us on the show as well. Chakri, hi. Tomorrow, of course, is the numbers from HDFC Bank. The street is fairly excited and the stock price too. What's your own expectation as to what we should watch out for HDFC Bank and what does the future hold?
HDFC Bank, as we all know, has been treading water for quite some time now on the not fear, but a little higher than expected credit costs and lower than expected volume growth. And also now the companies, so going into tomorrow, I guess, if they show some kind of stability in credit cost growth, which is, probably they'll deliver kind of an inline number. And as far as volume growth, positive surprises are unlikely, given that, they probably want better margins and lesser volume. So given all that, the stock has, valuation-wise, I think it's okay, but I wouldn't really go after and take a big position in HDFC Bank.
Chakri, so where are you using decline to your advantage to add more stocks?
If you look at basically the current earnings trend and management, when they come to you, it's all in the industrial space, infra, automobile, auto ancillaries, and of course lately there's some of the deep cyclicals like metals. This is where most of the earnings upgrades are coming from, and so and so therefore the comfort is there because once statistically the earnings start upgrading themselves, that usually becomes a multi-quarter phenomenon.
Okay, let's see whether it becomes a multi-quarter phenomenon or not. But for now, just taking stock of the big buzzers, Force Motors pointed out is up 12%, and overall auto pack with M&M, Maruti, etc. doing quite well. And in fact, Chakri, there are brokerages which are talking levels of 14 to 15,000 on the Maruti stock now. Would you concur with that view?
Maruti as a company clearly rising aspirations and all those well-known story. The launch of their new EV models a couple of years down the road, and that segment, that price segment, is actually quite vacant in terms of on the higher end you have now the Teslas will come in, the other players, existing players, the foreign players who are already there are there. But in this mid segment, I think they have the most credible range of lineup. So I think clearly both their IC and as well as their new models, very strong outlook, and therefore it can buy.
Well, it's a bit of a nostalgia moment, at least for all of us at now. ET Now today celebrated BSE Day. It was more like a grand tribute to India's oldest stock exchange. We had the honors of ringing the bell at Bombay Stock Exchange with Team ET Now, and the two real daughters of Indian financial sector, Hemendra Kothari and Kiki Mistry, and then the CEO of Bombay Stock Exchange himself. Hemendra Exchange, which then became BSE.
Okay, so that was that moment of nostalgia. BSE, the oldest stock exchange in Asia. So definitely a big day, and the bell ringing right there at ground zero. But for now, Nifty around that 22,150 mark. And of course, we have numbers that we're anticipating from VPRO today. So I'll quickly run you through the expectations after disappointment coming in from Infosys as well as TCS. TCS wasn't really a disappointment, but the top line was a bit weak. For VPRO, we're expecting that there's going to be a constant currency decline of 0.2%. Margins are expected to be largely stable. Remember, BSI vertical has been weak for VPRO, so commentary on that will be important. Deals might be a bit muted this time around because there was that sudden change in leadership that happened, where in theory Delaporte actually stepped down and Mr. Pillai had actually taken over. So that's something the street will watch out for in terms of what the comment from the new CEO as well as the Q1 FY25 guidance is something to watch out for. Chakri, you've been tracking this space very closely, and there is a very clear disparity in terms of what TCS has reported as well as what Infosys has reported. And also, if you look at the guidance for the coming year, Infosys is talking about just 1 to 3% kind of growth, whereas TCS at least has said that FY25 is going to be better than FY24, which clearly pegs TCS at a higher growth rate versus Infosys.
Yeah, if you look at the expectations of that 3 to 6% growth, what happened in the case of Infosys, and it's a combination of both these one-time issues. But I think the broader theme for the entire sector still remains that discretionary spend still continues to be weak. The order line, the order book continues to be strong, but the order book is not converting into revenue. Some amount of margin benefit the whole sector will benefit because of the fall in rupee, increased utilization, a lower bench. All that will work in their favor, but pricing clearly is not in their favor, given that the rupee is anyway fallen. Given all these things, I think it's an incremental story in the case of Infosys. I'm sorry, VPRO tomorrow. It's incremental negative they're going into with the new CEO, old CEO, etc. So the whole sector in general and Wipro in particular wouldn't really buy the sector now.
The sector right now waiting for the right time, but in the meantime, a lot of price volume buzzers in the trading session. Let's take it across to Ansh to get that detail. Hi Ansh, tell us which are the list of stocks which are buzzing up.
Hi, so Lupin will be the first stock in focus. As you see in the chart as well, the stock was stuck between a consolidation for 16 sessions, and today the stock has given a breakdown from this consolidation pattern, touching 2-month low level as well. Apart from this, Raymond will also be in focus as the stock has actually given a breakout from its key resistance zone with volume of over 5x its 20 session average volume, which indicates good participation in today's breakout, and it has also touched 7 high level on intraday basis as well. Lastly, Motilal Oswal will also focus as stock has actually surpassed above its key pivot high of 2120 level, touching record high level, and the move was mainly backed by high volume of over 3 times its 20 session average volume. So keep an eye on the stocks.
Okay, we absolutely will. Kunal, any view on these top buzzers that Ansh pointed out? Motilal Oswal, which is actually doing quite well, and then of course Force Motors, TVS Supply. These names are definitely doing quite well in at a time when the rest of the market is in a bit of a tizzy still.
Yeah, so that itself tells us, Nisha, that the markets are not going into a very major kind of a sell-off mode like what we saw in the month of March. Because in the month of March, literally 8 out of 10 stocks, or maybe 0.5 out of 10 stocks would probably have been going into a downward trend. But this time around, it's completely different. In fact, even if you look at, say, for example, today morning, a lot of many mid-caps, mid-cap names and maybe the higher to larger cap stocks, which are still trading above their March lows for themselves. So that itself tells you that the selling was concentrated towards few specific names, few specific sectors, and few of the odd larger cap names. So I think that now is seemingly behind, and we could now be at a point when the stocks would probably see a stronger follow-through up move. So the likes of, for example, Motilal Oswal, almost 4 consecutive months of price uptrend for the stock, which we've seen from I think 600 or 800 is where the started off for the stock. TVS Supply Chain could be something interesting because the stock last I think 6-7 months or so had been showing a very major kind of a downtrend. So this kind of a strong up move, 15% plus up move for the stock today could probably negate that kind of a major downtrend and probably be an indication that a stronger trend could be in the offing for the stock.
Okay, that's the take coming in on the market mood right now. But let me now pass it across to my colleague Ajay. He's of course at the BSE in conversation. BSE Chief Regulatory Officer. Ajay, take it away.
Nisha, it's a very interesting day. A lot of action happening in the market, very sharp recovery after a brief turmoil early in the day. And this is a special day because we are celebrating BSE Day right here from this historic and legendary hall at the Bombay Stock Exchange. Earlier in the day, we had some legends from the market and corporate India along with the CEO of BSE. Now I have with me Madam Kamala, who is one of the prominent faces in the world of finance, which is still seeing very gradual improvement in participation from women, but she's doing a fabulous job of the Chief Regulatory Officer here at BSE. So Kamala, thank you very much for joining us on ET Now today at BSE Day.
Thank you, Ajay, for this opportunity. Happy to associate with you on this program.
Great. I was very impressed to know that, even now on ET Now, we are always taking this message forward and encouraging a lot of women to participate in the world of finance. But it is very gradual, though there is progress being made. But you chose to, join the world of finance, stock market, regulatory 2-3 decades earlier. So you've seen the entire journey. You've also seen the journey and evolution of Indian investor. In today's dynamic, world, how do you think the life of an investor has actually changed versus last few years?
So if I just recall 3 decades ago, life of investor was very, very different. Not many people knew what stock market meant. People also thought market was for very select few. It's a closed kind of a market and things like that. Accessing market was not at all easy in those days because size mattered the most. But with all this technology coming into picture, our markets are now at the doorsteps or at fingertips of the investor. because today you can trade even using the mobile technology. So I think we have seen a great transformation in terms of making our markets accessible to retail investors. And it's a tremendous journey because in those days, people used to really scout for a broker, or if you were not part of a Mumbai as a center, then you would really find it difficult to even connect to a broker. Forget about investing. Today, everything is at your doorstep. That's clearly a transformation which technology regulators and stock exchanges together have collaborated to make it happen.
Excellent. In fact, yes, there is a transformation happening in the participant side as well in the market. Earlier, the dominant players were the FIs and the DIs. But now we are seeing a third dominant front emerging, which is the retail investor. And we see the data is on the table in terms of addition of retail investors and new guys coming in the market. But when we interact with this bunch, sometimes we get a sense that making short-term money, that is one objective. Then there is the other objective of making wealth, of creating wealth. How would you, with your rich experience and of course the role which you're playing, what will your message be to both the pockets of the participants that you're joining in now?
As you rightly said, Ajay, market has different constituencies. In the marketplace, there are arbitrators, there are speculators, there are investors. All three are important components, and nothing is superior or nothing is inferior. It's just that the mindset required for dealing with each category is different. And for speculation, the mindset that you need to have, the psychology that is needed, and the awareness about what is happening around you is quite different from an investor who once in a parks his money in the asset class that he is looking for. The psychology required there is different. What is the objective or your goal for which you are entering the market becomes very, very important. And arbitrages, as you know, are looking at price differential between marketplaces. So all three constituencies together make a market. And as a retail investor, if you are entering, you should be clear in your approach. As an investor, what is that I am looking at? Usually what we have found in our experiences, investor at the time of entry thinks that he is entering the market for an investment and a reasonable return and for a mid-term and long-term outlook. Somewhere down the line, they get distracted and get tempted to look at day trading where they are not empowered, equipped, no? They are getting into that area. So that is where the challenges are. So I would advise all investors entering to first know what is the bucket in which they are entering and also the time horizon that they are looking at when they enter the market.
So there is Pashupati, there is Kunal, Nisha and me. I'm going to ask this question to everybody. Kunal, what was, when you started trading for the first time or when you understood about Sensex and Nifty, what was the level of the Sensex and when was it? When was it?
So I started off in 2007. I think it was the month of January. I'm not sure the level of Sensex, but the Nifty was I think around
Sensex.
I think it was around 7,500, 8,000.
7,500. Chakri, what was the level when you started investing? Sensex level?
Yeah, I don't remember the number. I started in 1996. And from then to now, I actually don't know the number from then to now.
Naresh?
Started back in 2004, in May 2004. It was around 4,000 to 5,000 Sensex. And just when I entered 2 weeks later, we saw the Black Monday, 17 May 2004.
What about you, Nikunj? When you started tracking markets?
2000 is when I started my professional career. Of course, you know, I come from a business family, so the chatter of the Sensex was always there. But what I can recall in terms of tracking, I think it's from 2000 onwards, the Sensex was at about 3,500, 4,000.
Wow.
Went up to about 5,500 and then 6,500 actually peaked in 2001. That was 14th of Feb. And then it was a straight line fall. My first day in Mumbai, when I started in 2003, Infosys gave a profit warning. And the Sensex had plunged below 4,000. So that's the way it is. Now just think about it. I mean, what is the power of compounding? The power of compounding is that if you just held on to the index, did nothing else, and you said, I'm just going to keep focus on the index. What have we seen in last 20 years? We've seen assassinations. we've seen change of government, we've seen COVID, we've seen demonetization, 2008 GFC crisis. But ultimately what has triumphed is the human spirit and the ability at which humans can actually innovate. And that is how some of the great Indian investors and global investors have made money. We think in terms of decades. And that is the time advantage, the patient advantage which they have, where they let the power of compounding work for you. And I distinctly remember when I started talking about the number of 50,000 on the Sensex, it was almost like an unimaginable and a far cry. Today when I asked, Ramendra Bhai and Keki on where they think markets are headed, the sense I've come back with is 3 to 3.5 years, maximum 4 years, the index could actually double. So 1 lakh may just be a pit stop. What may look like a magical number or what was almost like a dream number. It was unfathomable at 4,000. Can the index actually become 1 lakh? The fact is that is how it works. Chakri?
Indeed, now I did a quick check, and it was about 4,000 when I entered the market in around 96. And then I remember the next 2-3 years actually went through that 1998 crisis, global slowdown, and the market actually had crashed. And it took quite some time to recover. Then, as you rightly said, that look where it is today. So it's compounded by probably 20 times from that time period.
Yeah, good amount of compounding is what we have seen, and the big news is it's not done yet. We are definitely not out of that bull run. If you look at the stock markets right now and the kind of run we have seen today itself, that will tell you that we are still in midst of that big bull run. In fact, the other big event that we are watching out for is, of course, the elections. We did speak with a whole host of experts as to how you should probably look at the volatility of the elections. Listen in to the bites coming in from market veterans on elections and the importance for the Indian markets.
I think that the next major event to look out for is the budget in July. I think, look, the election is also very important, particularly from a foreign investor's viewpoint. I think the domestic investor base has already concluded and acted upon that conclusion regarding elections. But I think amongst foreign investors, there's still a large segment which wants to see the event behind us. They're prepared or have been preparing to act. They want to see the event behind us before taking action.
Maybe some amount of, disappointment or euphoria around that, because normally it happens, right? Elections are one event that happens once in 5 years, and there's a lot of rumors going around, a lot of people giving out their thoughts. So it's going to be fairly choppy around that time also. However, don't forget that immediately after the elections is going to be the central budget, which is going to be presented, I think sometime in June end or July beginning. And that will actually, as Sabir has rightly pointed out, I think we believe that is going to set the trend for the next couple of quarters.
It's turning out to be a decent week, given that so much of news was thrown at markets this week. You had the comments from Fed, you had local numbers to deal with, market reacted to Infosys numbers, and then if that was not enough, in the morning all the confusion and chaos around geopolitical crisis. So on a week where a lot of news has come, I think we've done rather well for them ourselves. We went below key levels, in the morning trade, we popped right back up. So for me, I think this week's price action, Kunal, is more than just satisfactory. It is actually promising. Am I right in saying that?
Absolutely, yes, Nikunj. And I think, we started off the week on a much more positive note, but we are ending the week on a much more, believable that, the markets are not going into a very similar kind of a tailspin which we saw in the month of March. Because in the month of March, it was very difficult to try and, fathom where the indices or whether stocks would probably try and bottom out. But this time around, the sell-off has been completely different, and it's been affecting just about few odd sectors, few odd indices largely, and it's not affecting the major or the entire market as such, like what we saw in the month of March. And I think that's what the belief and the sentiment on the positive side could probably be the takeaway for this week.
Okay, point taken. In the meantime, it's TCS, which is the biggest drag on the index right now with a cut of over 1%. It's a cut than actually Infosys at this point of time, and LNT2 is dragging its feet a bit. But the other big event to watch out for, Chakri, apart from the barrage of news flow that we had to deal with this week, is of course that much awaited Musk visit in the coming week, where Elon Musk will come and perhaps announce a whole host of investment for the Indian EV ecosystem as well. What do you make of that, and which are the stocks which probably one should keep on the radar with respect to this entire EV transition?
A lot has been spoken about his visit, Elon Musk's visit, and clearly Elon Musk is coming in at a price point. Tesla is coming in at a price point which is about the 35 mark, so it doesn't really impact the Marutis of the world. So therefore, the benefit for Indian listed auto companies of any big market share is it doesn't make an impact at all. What is positive is for the auto ancillaries. The bearing companies will clearly benefit, depending, because they're usually the more easier parts to outsource. Companies like Timken, SKF, these companies, not only work with export companies, but they're also very strong, and they will also benefit from other industrial activity picking around them. Second is companies like Minda and all the wiring companies, they'll also benefit. The list is actually building up. So I think hopefully if there is a real announcement, then you can see further trades in all these companies.
Chakri, what do you think is the best player on EV?
In EV, I think, all these, for example, these auto ancillary companies, whether the Indian EV market share, their revenue base, whether it takes off or not, if you take a company like Timken or even SKF, they have a fairly good existing export order book. Now, the hope and expectation is, their domestic bit of the EV bit will also start taking off. Now, so it doesn't matter as long as the company has both avenues, export and domestic. So this companies fit that bill. Second is, again, it's clear that it's not going to be EV replacing ICF at least for the next many, many years. So as long as they have a strong market flow, market products for both the segments, again, these two companies and such other companies, I think that's the approach, which is not clearly bet on things which don't make products or products only for EV, but also both.
Bombay Stock Exchange also, Ajay, of course, at the Bombay Stock Exchange with the COO of Bombay Stock Exchange. By the way, Bombay Stock Exchange or BSE, the stock has done rather well for itself. That's nifty for you. In 35, the Sensex for you, the stock of Bombay Stock Exchange, which is BSE, is about a 10x from Kodo. Chakri, there's a theory that winner takes it all. And BSE had lost market share, but look at the comeback. How to find a stock which has given similar kind of returns in the last 3 years? It's a 10x.
Indeed, and in fact, it probably went up about 4x, 5x just in the last less than a year or so. And it has been one because of all its past, it had lost market share, etc. The stock was derated, multiple had come down quite dramatically. Companies' fortunes turned around, some amount of market share, and plus the margins, more importantly, in a business which is highly commoditized, is improving. Range of products, etc., are improving. So I think, it's done a phenomenal run, especially in the last 1 year. But I still think there's a good amount of in BSE, the stock.
Probably available on BSE. Just wanted to highlight those updates coming in on HDFC Bank because it's a very smart recovery that we have seen. Remember, we started off with the news flow coming in that the company has informed exchanges that they're looking to probably mull a fundraise as well via various options, including a QE. At that point of time, that stock had suddenly slipped 2.5% because the worry was about equity dilution. And now Nomura has come out with a note saying that the company, or rather the bank, will be evaluating potential equity capital. And that, if does happen, would come as a surprise. 300 basis point of extra CET1 ratio, if the bank needs, it will have to raise 9,900 crore rupees, and an equity supply risk could be a near overhang for the share performance. But for now, Axis Bank has materially come off the highest point of the trading session. Before I hand it back to Ajay at BSE, let me quickly take the BTST trades from our chartist. Quickly, your BTST picks.
So 2 buy calls. The first one on Bajaj Finance, targets of 72.20, stop loss at 6,900. And Escorts is something which is looking attractive as a fresh breakout, 3,205 as a target, stop loss at 3180.
Duresh, your picks?
Could be a buy on M&M with a stop loss at 2040, target price of 2120. Second would be a buy on IDFC Limited with a stop loss at 121 and target price of 127.
Okay, time now to hand it across to Ajay for the closing bell.
Well, that's correct, Anisha. Right here at the closing bell, just minutes, just seconds away from the market closing. It was a very eventful day as far as the markets go. And of course, now because we celebrated BST Day. So let's do the market closing with Kamala Madam. Okay, let's start the bell. Just a few seconds coming in. Your watch is already 30, right? Okay, just how many seconds? Okay, let's just. Anisha, back to you.
If you like this video, then like, share and subscribe to ET Now.